Welcome back to the channel. It's me, Adam, and in this video, I want to talk about Alibaba stock. And we first started talking about it on the channel last year when the stock was about, let's say, 260, 280, well off its all-time high of above $300. And this is around the time that Jack Ma started going missing and the anti-IPO was canceled. And it was just the beginning of, the CCP tightening restrictions and all that. And no one had taken it too seriously. The market was doing overall pretty well. There wasn't the FUD around Chinese stocks that there is today. And all was kind of going well in the Alibaba world. And then we all know what happened from there. 280 became 250, became 230, became 200. And now we've hit as low as 138 pretty much. And I want to ask in this question, have we finally turned around? Because as of Friday, the stock was up 3.54%, hitting a low earlier this week at 138. And that begs me to ask the question, have we finally bottomed? Are we going to be turning around, trading sideways, or are we going to continue the downtrend that we've been experiencing for pretty much the past year? So before we get started to the video, if you're new to the channel, welcome aboard and hit that subscribe button. Here at Unlimited Options Investing, we talk everything from stocks, crypto, options, ETFs, and we're investing for the long term. As always, smash that like button and let's get started. All right, starting off with Yahoo Finance. So Alibaba was up 3.54% on Friday, up $5.52, and holds a market cap of $437.86 billion. If this was an American company, this would easily be flirting with $1 trillion, maybe even more, which would put the stock price of at least 320, 350, probably even more. It's the Amazon of China, and they aren't just an e-commerce company, but they have so much more. When it comes to cloud computing or the financial services, they have so many different subsidiaries, just like Amazon. They are a conglomerate of some sorts. We see the 52-week range at 138.43 and 319. So we hit over $300 less than a year ago. So less than a year, guys, we've had a 50% drop in a mega cap company. As a mega cap company, we're trading at a forward PE of 15 and a price to sales of 0.57. That is very low, guys. And a revenue estimate in 2022 of 27.2 and 2023 at 19.5%. And another piece of news, Charlie Munger, who's friends with Warren Buffett, as we all know, doubled down his stake in Alibaba. As you're hearing a lot of good stuff, there's a lot of fear surrounding the stock. The stocks have beaten down. It's a mega cap company. It's not going to be going anywhere anytime soon. So all these things you're hearing, which are really good when it comes to investing in a company that's been beaten down. However, the one thing that comes to Chinese stocks that should be spooking everyone is that you are buying an ADR. And that is an American Depository Receipt. So the term ADR refers to a negotiable contract issued by a U.S. depository bank representing a specific number of shares, usually one share of a foreign company stock. So long story short, guys, you don't actually own the shares, you own a receipt of the shares. So if anything were to ever go wrong with the stock or they delist or anything that we can't really predict, pretty much you're crap out of luck, pretty much, and don't actually own part of the company the same way you would own part of Apple or Microsoft if you were to buy their shares. However, one can just look at this as another risk factor when determining whether they want to enter or not enter the stock, and has to be prepared for anything to happen. And as with any stock, really, every stock has their own risks, whether it's because of their sector or because of their CEO or financials or whatever it may be. And this just happens to be the risk factor for Alibaba. So if this is something that you could swallow and say, hey, listen, you know what? Everything else about this stock I love, but this thing, it's a risk I'm willing to take. You know what? Maybe it is a good investment long term because, again, they're not going anywhere. They're going to be doing really, really well over the upcoming years. There's so much going for them. There's so many tailwinds that it actually might be worth the reward, the risk. All right, and taking a look at Alibaba on the weekly. And the first thing I want to show you guys is this trend line that I had drawn before. Let's say I think the stock was still above $200 at the time. And this is a trend line that I was following closely from 2016. And this is what I had before the big drop a couple of months ago over here. And essentially what happened is when the stock had closed below this blue line on the daily for a couple of days, I said there is no way I am entering the stock until whatever pain is about to come finishes. Now, I had no idea it was going to fall all the way down to 138 or to 150 or whatever. But I knew that there was potential for it to happen, and that's why I had stayed away until I was comfortable getting back into it, because at this point, I was not. This multi-year trend line being broken only meant potential really bad things for the stock, and of course, it did happen. So now focusing on that bottom part. So I was telling myself as this was falling, 130 is an interesting buying zone because this is where we fell to back in 2018, And if that broke, then the next stop I would be looking at is 110 mark, which would have been the resistance of this area over here. And one could have actually looked as well at the top of this resistance back from 2015 at around 120 would have been also another potential zone as well. But taking a look at the weekly candle from last week, this is a really nice bullish engulfing candle and could be a sign for the turnaround beginning. And looking left at previous recoveries, we see that over here when the stock was a lot higher back at the beginning of this year. We see it at the trend line back in March during the pandemic crash. We see it as well in 2019. We see green candles over here as well as this. So seeing this is definitely very encouraging. Nothing is confirmed yet. It wouldn't be surprised if we started recovering from here, but I also wouldn't be surprised if anything really were to happen until we get some kind of until we're like, let's say, above 180 again. I'm not feeling that confident until we're at least above the 20 EMA, testing the 50 EMA, and then trying to get back above this trend line that we once had upon a time. But and we can also draw a line at $200, which would be a pretty strong, let's say, psychological zone. Any like even number like 10, 20, 25, like any kind of number like that, 200, 300, 500 has some kind of psychological merit to it. Now it doesn't mean everything, of course, but there could be something there as well, especially because we were over 200 for so long last year, and that's, I guess, the golden zone where I think people want to see it go back above again. So definitely interesting stuff going on with Alibaba stock as well as the rest of the Chinese market. Let me know, guys, in the comments below what you think of all the FUD that's been going around, the CCP, Chinese stocks. Are they going to recover, continue bleeding? Are you comfortable buying an ADR, or are you sticking to American stocks? Let me know in the comments below. As well as always, smash that like button, hit the subscribe button, and I will see you guys in the next video.